Hey, Dwayne, CFRN. It's Tuesday afternoon, 3:57 p.m. Today's Tuesday, 6th day of August, 2013. I want to go over the tweet that triggered for us this morning. We've had a tweet in place now for a couple days. Consider being long above 1705, short below 1699. We've not been able to trigger on the upside. The short did trigger for us today. Now on this candle, and these are hourly candles, the swing low was 1698.75. That number is important. Let me write it down. 1698.75. When I put out tweets, they are usually based, in most cases, unless it's intraday during the radio show. Sometimes I'll send out a tweet for you during the show. But if it comes out in the afternoon, the evening, on Globex, early morning hours, just know that I'm looking at a larger time frame, hourly, 4-hour, possibly even a daily, when we get into markets like soybeans, crude, gold, that type of thing. Now on the S&P, the tweet was to consider being short below 1699. We get one tick below. Price retreats the next hour, puts in a swing high back up at 1701, okay? And then in the third hour we break through, and then in the fourth hour it takes us all the way down to a weekly trading zone at 1690/91. What I want to show you in this video, I went over this today during the after show. Each day after the radio program, as time permits, I stay with the audience for about 30 minutes to an hour to answer questions and to go over trade specifics and to just do a little bit of teaching and training. We're going to go to our 4-tick range chart now, the Slingshot. What you want to remember is this number, 1698.75. We got to be on the 6th. Here we go. All right. 1698.75. See the pop up there? The swing low right here is 1698.75. That's important because this is where the tweet triggers. Now, what is the Slingshot? How does that work? There's 5 steps. We use the Slingshot to trade the S&P, soybeans, the Russell, the NASDAQ, gold, crude, you name it. If it's an auction style market, we use the Slingshot to trade it. We don't change the time frame. We don't change the indicators. The only thing we ever change is the symbol. The purpose of the tweet, that gives you the bigger picture idea. That helps you to go stand on the right side of the street. You still need to define an exact entry. Can you just trade the tweet? Could you just be short 1699 in this case? You could. And would you have done well? Just fine. But in many cases, in most cases, you will want to be able to not only pinpoint your entry, but you want to be able to limit your risk. When we use the Slingshot Trade, we never risk more than 8 ticks. Doesn't matter what market we're trading, gold, crude, or the S&P 500, we never risk more than 8 ticks. Okay? Step 1, we need a bearish cross. This red line here, this red and blue line, it's the CFMA1. Not a fancy name, but a pretty powerful little tool. A lot of heavy mathematical lifting going on in the background. Basically, it's the backbone of our indicator set, the primary indicator, if you will, and it defines where we're going to be trading and how we're going to be trading. Once it crosses over that green line, which we refer to as the BBC, which means nothing more than bull-bear cross. When price is above the green line, buyers are in control. Once price gets below the green line, sellers are in control. That simple. And when this red line crosses this green line, that defines the place and time where the sellers take control of this market. Now let's roll back out real quick to the 1 hour. Remember, we have a tweet waiting to be triggered. That thing's triggered. We're wanting to be short the market down to our next weekly trading zone, which is at 1690/1691. It's a very nice move, right? Okay. But yet we have to do it and still manage our risk. 1698.75, bearish cross, that's step number 1. Step number 2, we need price to pull away from the BBC. Step number 3, we need price to pull back to the BBC. I want you to actually think of a literal slingshot, okay? Pulling it back, right? Now, once price comes back to touch the green line, as it did here, we need to check and see if we have bearish divergence. If we look at the lower panel, we can see that the red line here, now down here, this is a different indicator. It looks the same, but it's different. Here, it's simply called the cycle, okay? The cycle needs to be below the green line to create bearish divergence. Now, this may differ from your definition or understanding of what divergence is. Typical divergence, you think of an indicator doing one thing while price does the other thing. This is different, so bear with me. Let me walk you through it, okay? Step number 1, bearish cross. Step number 2, price pulls away. Step number 3, price pulls back. Step number 4, check for divergence. Check, 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 check. Everything's in place. This is good, right? Now, this cycle line, if it remains a solid color, red, if we're looking to take a short trade, then all we need after we pull back is a down close. That's this red candle right here. If the cycle changes color during the pullback, we need a trend line, and we have to close below the trend line to trigger the trade. We've got one of those coming up, and I'll show it to you in just a second. Okay? So all we need here is a down close. We have one right here on this red candle. Once we have that, we're ready to enter the trade. The open of the next candle is 1700. Okay? 1700. Remember, we got triggered in on our bigger time frame hourly chart. We know we're looking for a short trade. We let the it says slingshot down here, but the whole thing together comprises the slingshot. Step 1, step 2, step 3, step 4, and now 5. We get short by selling the open of this candle at 1700. The swing low right here on this candle is 1698. 1700. $16.98. It's 2 points. Our daily goal is 2 points. That's it. We have this incredibly simplistic philosophy that 2 points is all we need. We could try to get more points, and we can get more points, or we can get 2 points and trade more contracts. We don't trade more contracts simply because we can or because we have money in our account. We trade more contracts based upon our skill set. All of our students, partners, begin in the simulator until they're consistently profitable. Okay? In the simulator until consistently profitable. Then you go live with one. And that's it. That's all the risk capital you ever put up. Hear me out. That one contract you're trading, if you get 2 points a day, that makes you a whopping $100. Now, unless you live in a third world country, that's probably not going to pay your bills. If you live in a third world country, it could make you king or president, El Presidente, right? Now, we have a lot of partners who live in third world countries, and we have a lot of partners who are missionaries that go into third world countries. For those, a high percentage of the largest percentage of our partners do live here in America, and we all know that $100 a day, while it's better than some hourly wage jobs out there. Minimum wage right now, I think, is $7 an hour. I don't know, call it 8. That's like $320 a week. And people work really hard for that money. Sometimes on their feet all day. Sometimes exposed to the elements. I mean, all kinds of things. So I don't want to scoff at $100 a day. But I also am not making this video to promote you learning how to make simply $100 a day. What we've decided is that it's in our best interest and the best interest of our partners, rather than figure out a way to get more points out of multiple markets, we just want to get a couple points out of a market. If we get 1 point out of one and 1 out of another, well, that's okay too. The 2 points out of the S&P 500, that's what I'm going to use as the example. It's $100. If you want to double your pay, you just trade 2 contracts. That's what happens when you go from 1 contract to 2. You double your pay. Okay? Now, I said that initial $500 of intraday margin that you put up to trade that first contract, it's all the risk capital you ever have to put up. Well, let me explain what I mean by that. We want you to earn $1,000 in the market before you go to 2 contracts. Once you go to 2 contracts, we want you to earn another $1,000 in the market before you go to 3, and another $1,000 before you go to 4. The reason is that keeps your initial seed safe. Ask any farmer. You gotta keep your seed safe. Capital preservation. That's so very important. If you're going to grow your Emini trading business, you gotta keep your seed safe. If you follow this method, if you'll stay in the simulator during your training until you're consistently profitable, and then only go live with 1 contract. Stay with that 1 contract until you've earned $1,000. Once you earn $1,000, you're going to have to use an additional $500 in margin to trade 2. But you've added $1,000 to your account. You follow the math here? Okay, very good. So, there's 2 points. First trade, 1 shot, 1 kill. Is it always that simple every day? No, it's not. Some days it takes a couple trades to get 2 points. Some days it takes quite a few. Some days you get stopped out on the first trade. Some days you get stopped out on the first few trades. And that's simply the truth about trading. And anyone that attempts to convince you of anything other than that, well, shame on them, because they're not being honest with you. I am. I'm telling you the truth. It happens. You will get stopped out. You will get stopped out sometimes, multiple times in a day, and often it can happen back to back. That's why you need 90 days of training. Not so that you can learn the little 1, 2, 3, 4, 5 steps that I just showed you. My son, who's pretty good at video games, I could probably teach him those 5 steps in an afternoon. It's not that complicated. It really isn't. Let me show you one more time. Bearish cross. Price pulls away, price pulls back, check for bearish divergence, wait for a down close, sell the open of the next candle. That's it. Well, okay, then what do you do the other 89.5 days of your training? We teach you what to do after you sell the open of the next candle. See, that's what trading is all about. And as you peruse the internet or open your email and hear about all of these wonderful trading strategies, they mostly deal with 1 through 5. I mean, it's their variation of 1 through 5, but it's still, they're selling you the 1 through 5. All right, we got the 1 through 5 too. Got to have that. You got to get into the trade. But listen, nobody ever made a dime entering a trade. Think about what I said. Nobody ever made a dime entering a trade. It's what happens after you enter the trade and where you exit that trade. That's what translates into something you can use to buy groceries with, pay a mortgage with, send your kids to college with. You follow me? Okay. So then what? There's 2 points. Is there more? Do we stop? It's not even, well, these are Pacific Coast times. It's 8 o'clock on the East Coast, or 8:45 to 9. What do I do? Do whatever you want to do. Many of our partners are involved in ministry, and so they put on their ministry hat and go do whatever it is that God has called them to do. Some of our partners have other jobs. Our partners do all kinds of things. It's your day. Do with it as you will. Okay? Is there another trade after this? Well, let's go back to that hourly chart for just a moment, because remember now, we got triggered on the tweet at 99. The trade setup, because of the pullback, gave us an entry at 1700. Our 2 points were done at 1698. At what time? 6:15 Pacific time. So that's 9:15 Eastern. Okay. Let's go back to the hourly. $16.98. See the time? Add 3 hours for East Coast. Okay. Remember that pullback? It's all right here. Okay. So let's go left. I'm going to walk it across 1 candle at a time. After the 2 points, price pulls back again. Now, is this a trade here? Well, it is. After this 2 points, price pulls back into the what? That's right, the BBC, the bull bear cross line. Now, on the candle that it pulls back, just so happens this thing's still red. Okay? That candle. See it? Follow the cursor. See it all the way down? It's still red. See, once it turns blue, like it did on the next candle, that's when you got to have the trend line. And I'm going to show you that in just a moment. But for now, all you need is a down close. That's all you need. Oh, wait. You see that little black line? See that? It's called the step line. See how that got pulled up into the green line? That negates this trade setup. Even though you can clearly see this thing dropped another couple points, this right here kills the trade. Oh, where's my ellipse? Oh well. I was going to draw, but you can see it right there. Okay. Alright, so we got no trade. So we wait. Price begins to drop or pull away from the green line here, the BBC. The step line drops with it. Very important. Because as long as the step line is tied up here in a knot like this, we can't have a trade set up. Price starts to drop. Okay. Price pulls away. Price pulls back. Touches. We got to check and see if we have bearish divergence. We look down. See, just follow the red line straight down. We do have divergence because the cycle is below the green line. However, unlike over here, see See how the line stayed red? Over here it turned blue. So now we've got to get some additional confirmation up here because we only want to trade a high probability setup. So we're going to draw a trend line across the bottoms of these candles. So where price pulled back, we're just going to draw a simple trend line. That's all it is. It's just this guy right here, trend line. I'll show you. Make it go away. You just come to the swing low, you go right across the bottoms, okay, up to the BVC. Then along comes this red candle, and it not only touches the BBC, it gives you the down close that you need to enter another trade. Still got your bearish divergence. The entry price after this down close, you're going to sell the open of the next candle. Sound familiar? It's the same thing. Over and every trade is exactly the same. Bullish or bearish, gold or soybean, it's the same thing. Entry is 1696.50. 1696.50 down to 94.50 right there. That's your 2 points right there. 1694.50. Okay. So, off of the bigger picture tweet on the hourly, we had one 2-point trade at 1700. We had another trade set up, but it was disqualified by the little black step line. We have another textbook slingshot trade. We just need a trend line this time because our cycle changed color on us. We get another beautiful little 2-point drop down to 94.50. If you stay with the trade, which you're welcome to do, follow it with a tight stop, what happens? It eventually gets down to our weekly trading zone right there, 1690.91. Now the weekly trading zones go out to our partners every Monday morning before the market opens. Once they're published, once the partners have them, that's it. They're cast in stone. We don't change them, adjust them, manipulate them. That's it. It's a done deal for the entire week. A weekly trading zone is simply an area in the market where we believe that the market is going to pause, consolidate, coil, and make up its mind what its next move is going to be. And once we hit a zone like this, there's only two options. It's either going to the zone overhead or it's going to the zone below. Well, can it go sideways? It can. But only for so long. Eventually, it's going to go to the zone overhead or the zone below. But, just wanted to show you that's what happened. Okay, so now what do I do? Well, again, you go do whatever you want to do. If you're determined to keep trading, because you already had a 2-point trade, and then this one here, if you followed it all the way down, what did that go, 5 points? Go back and look at the entry. Entry was 96.50. Now here's the key. It's one of the things that's really cool about the Slingshot. And we designed it this way. Because I don't know about you, but I've been in a trading room or two where everything is so nebulous. So ambiguous. I mean, you hear bells ringing. and some guy's tooting his horn and crowing about, oh man, we just killed it on that one. And you're like, huh? What are you talking about? You never said get in the market. Oh, of course I did. Didn't you hear me say this looks like a pretty good area to... Well, yeah, you did say that, but you didn't ever say get in the market. You didn't say sell the thing. Well, and then they get angry, bite your head off. Sometimes they boot you out of the room if you ask too many questions, right? So, anyway, we created our system to be a little bit cleaner than that. Every partner, every CFRN partner, and actually anybody that's on a free trial with us, who has been with us a couple days so that you know how to read the indicators, from Brooklyn to Bangladesh and all points in between, everybody knows that the entry for this trade is exactly 1696.50. No ambiguity. It's not nebulous. It's not a neighborhood or an area or a good idea. Okay? It's a trade. You don't have to take it. But if you're looking for a trade to take, you see it, you know it. The rules never change, ever. I just told you every rule we have for this trade. That's it. There are, well, yeah, but there's got to be more to know. That's it. I just told you everything there is to know about this trade. And if it's a bullish trade, it's just the same thing in reverse. Oh, you want me to show you a bullish trade? Okay, I will. Okay, so from 96.50, we drop down to the zone at 91. Now, how many points is that? It's about 5.5 or so, give or take. This little guy, right, that's the 2-point mark. And then it continues on down. So what happens after it hits the zone? Remember, I said that we think the zone is a place where the market, now remember, these go out Monday morning before the market opens. But we believe each time price hits a zone, it's going to coil, consolidate, make up its mind what it wants to do next. See it bouncing around there at the zone? Coiling, consolidating, making up its mind what it wants to do? Okay. Now, look what happens. We get a bullish cross, the exact opposite of a bearish cross, right? The CFMA1, the backbone of our indicator set, the primary indicator, crosses above the green line, the BBC. So we want to be long because now the buyers or bulls are in control of the market. First we got to have the cross, then price has to pull away, and then price has to pull back. Okay? Once price touches the BBC, we then have to check to see if we have bullish divergence. Well, how's that different from bearish divergence? Okay, I'll show you. See how the cycle right here is below the green line? That's bearish divergence. Bullish divergence simply means that the cycle is above the green line. That's all the difference there is. Bullish cross, price pulled away, price pulled back. Check for bullish divergence. Got it, got it, got it, got it. Now all we need is an up close. We don't need a trend line because the cycle stayed blue. It didn't change to red. So once we pull back, up close, this candle closes at 16.92 1/4. So we buy the open of the next candle, this one right here, 16.92 1/4. We buy the open of that candle. Price marches higher. The swing high here is 16.95. So this move from right here, the open of this candle, to right here is 2 3/4 points or 11 ticks. Okay? So we had a trade that went south for 2 points. We had a trade that got disqualified. We had a trade that dropped a total of 5 points and then ran into support at our weekly trading zone. The market flipped around and then handed us a 2 3/4 point or 11 ticks. So I bet I had to look near and far to cherry pick a chart this sweet, right? Well, not really. Today is the 6th day of August. Tuesday, August the 6th, 2013. It's now 4:26 p.m. Pacific time. So that's what actually happened today. I'll try to make another video tomorrow. Oh, wait, I got a better idea. You could come and take a free trial. You could come and hang out with us in our live trading room. What do you think about that? You could also subscribe to our newspaper, but I don't want to overload you with information. cfrn.net/apply. Okay, here we go. Apply. All we need from you is your email, your name and email address, right here. Okay, let me open this whole thing up so you can see it. There you go. This tells you how we've done over the past few months. By the way, in case you missed it on the home page, we've been broadcasting for 8 years, 24/7. We're live from 12 to 2 with market stuff every trading day. The other 22 hours of the day and 24 hours a day on the weekends is, Christian programming. Teaching, preaching, music, discussion, podcast, great stuff. Encourage you to come and hang out with us. So to take the free trial, come to this page. Go take a look at our trading room results. We make about a 20 to 30 minute video every single day. Every day. Where we recap every trade from the live trading room. Every one. And we've been doing that since, well, we used to didn't do it, and I explain why on this page. Because most of the performance pages out there are a bit sketchy and a little fishy. Not all of them. I'm not saying all of them are. But you know what I'm talking about. But then we finally decided, no, you know what, we do need to document it. If we say we're doing it, we really should document it. So we do. Each day we make this recap. We do it during the live radio program. It's when we make the video recap, and then we post it here on the site and out on YouTube for all the world to see. Do we just record the good days? Do we just recap the good days? No. The bad days? We don't just sweep them under the carpet. We recap them too. Because that's the truth about trading. Some days you have to work really hard to get your 2 points. Some days it falls right in your lap. And then there's those days it falls somewhere in the middle. Okay? And then there's the occasional day where you actually don't get it. Okay? And you got to learn how to deal with that. That, again, is the truth about trading. You don't need a credit card to take the free trial. Okay? Just come to the apply page, pop in your email address and your name. Click the button. Here's the deal. Spam filters are very overzealous these days. It's hard for me to actually get something to your inbox, especially when I send it out via robot. And that's what happens when you click this thing. Our robot is going to send you out an automatically generated email that says somebody using your name at your IP address said they want to take our free trial. Did you really say that? Now, why do we do that? Well, it's called a double opt-in process, and that's probably way more information than you want or need. But it's done to protect you and us. We hate spam just as much as you do. And so we want to make sure that you really do want to take the free trial before we invest the time and the energy and the resources to provide a spot for you to take the free trial. If you do, great. You click the confirmation link. That lets me know that you're ready to get started. Then I personally go to the computer, myself or someone else here, and we manually, by hand, the old-fashioned way, send you out an email that has the link to the live trading room. It's got the link to download the platform, install the indicators. It's got videos for you to watch so you'll get prepared for the next morning's trading session. Answers a lot of questions. Plus it gives you all of our contact information. Myself and Michael and Bert and Leslie. It gives you all our email addresses, all our phone numbers, everything you need to get through the free trial. Now, during the free trial, you're going to get to spend 10 hours in our live trading room, watching us trade real money in real time in front of real people. On top of that, you're going to get 3 videos, total of 5 hours of training. What I just showed you, how the setup works, we're going to give you 5 hours of that on video. There's 3 video, 1.5 hours, 1.5 hours, and 2 hours. Now you got to be sitting there going, man, wait a minute. If the setup's really as simple as he just showed me, by the time I watch them trade for 5 days, watch 5 hours of a training video about that little setup, what in the world would I need to sign up and take a course for? A 3-month course. What else could there be to say? Well, let me ask you a question. Have you struggled to become a successful E-mini trader or stock trader or any kind of trader? Have you perhaps seen, read, or experienced the horrible statistical information that accompanies those few who endeavor to become people who trade for a living? Yes? Okay. Well, that's what happens after your free trial. After you spend 10 hours watching us trade, after you watch 5 hours of training videos, you are qualified now to make a well-informed decision as to whether or not you want to pursue a formal education. Seriously, a formal education? Yeah. Again, the steps 1 through 5, I just taught you. You already know how to do that. I just taught you. It's everything that happens between your ears and on your desk and in your life and in your finances after step 5. That's what we're going to work on for 3 months. Well, that's just crazy. I don't need 3 months of you telling. Well, let me ask you again. Have you struggled to be successful as an E-mini futures trader or stock trader or any kind of trader? Einstein, he's a pretty smart guy, he said the definition of insanity is to continue to do the same thing and expect different results. I didn't make that up. I just repeat it. And I know it's true because for years, that's what I did. I did exactly what you may be guilty of doing. Chasing gurus and chat rooms and indicators and things that go cluck in the night. Googling till my fingers bled. Looking for that one thing that would solve the mystery of the markets. That one thing that would allow me to fly high and never, ever, ever get stopped out again. Because nobody likes getting stopped out. If I get stopped out, that means I was wrong. Ooh, nobody likes to be wrong, right? See, I just gave you a chance to be right. That's how cool we are. That's how we roll. And I'm serious. You can keep spinning in circles, doing the same thing, getting the same results, or you can set yourself free. The truth will set you free. You may not always like what we tell you, but we'll always tell you the truth. Okay? So we're going to give you 5 days in the trading room. We're going to train your socks off for 5 days as hard as we can. Man, we're going to just tell you everything we know about trading E-mini futures. Not just tell you, but show you. Trade real money in front of you. At the end of 5 days, we'll say, hey man, you want to roll with us? And if you don't, that's okay. We shake hands, we part friends. You're still welcome to come hang out every day during the radio show, make, witty comments, crack jokes, participate in the discussion. We enjoy that, and you're welcome. If you do want to roll up your sleeves, get busy, go to work, and learn how to trade for a living. You want to actually learn how to take a couple points a day out of the market. If that's what you want to do, we're here to help. We got a program that's just created just for you. But it all starts with the free trial. Okay? CFRN.net/apply. That's how you get started. And I look forward to seeing you in the live trading room. Good night.